Hey, welcome back to Two Big Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And we're going to take a look at the market, and more importantly, Game of Trades is calling for an all-time going higher. We're no longer going lower, which, if we are wrong, we're going to do something that he won't do, admit it, and we're going to take a look at his video and where we think we're going and how we backed it up with our own cash.
Two stupid guys trade stocks.
All right, so you know Game of Trades, Vinny? Obviously you do. You showed them to me.
Yeah, I do. I did. I liked him at first. I really did. It took me a
So
little
did I.
while to figure out he was non-committal and doesn't seem to have ever traded a bear market, in my personal stupid guy opinion.
Yeah, I mean, to be fair, neither have I, but I also don't charge an $80 bullshit class to make sure that, they get a bunch of cash. So I was going to put in like a bunch of videos and analyze and do all this stuff, but it's just kind of a waste of time. So I'm going to make it simple. This is a video that's up, why this is not a bear market rally and there's a massive move coming. Originally, as we're going down, he's like, we're going to go up, no problem, boom, 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 boom. And then we got down, he's like, all right, now we're going to go down. And then we started going up. So he's almost like the Cramer of financial YouTubers.
Yeah,
Uh,
great way of describing him.
it's pretty accurate. Now, you could argue eventually he is going to be right, because I'm going to say within 100 years from now, the stock market does go up,
Yep.
inevitably. All right?
Over the long run, that is indeed the direction that is most likely to prevail.
Yes. Now, here's the evidence that is going. We're going to go up because bond yields we decrease as we aren't in balance with the UK or other countries. Bond yields will fall over the next 6 months. He gave a timeline. Dangerous. And TLT will rise along with the stock market. Now, while he's doing this, I'm going to save you all the time. He's using graphs of TLT over like 10 years and bond yields over 10 years. If you were to compare to an equivalent-ish scenario, you use the 80s. We did not have high inflation in the last 10 years. Okay, we were at, in fact, from 2008 to 2015, interest rates were 0.25. It's not an equivalent time to look at treasury yields or bonds. You need to do an equivalent time in history. So it's more cherry picking graphs over and over and over. Hey, this is why my point's right. Let me show you only evidence that shows why it's right. Vinny, you want to talk about that?
Well, the thing that I completely lost my mind with was when he's comparing it to the UK. The UK has so many other
Yeah,
issues that are completely
it's
unique to them right now.
yeah.
They actually, when you look at the amount of cash that they printed over the last couple of years since the whole pandemic began, they are actually one of the most aggressive ones. That'd be an interesting point to put up in terms of the M2 money supply graph. They went bonkers. That's why they're dealing with inflation that's over 10% right now.
Yeah.
You're talking about what, 30% more inflation than we're seeing in the United States. And then they also have a war that's affecting their energy prices. Like, they're not comparing apples to apples in the least.
No, and they just had that whole parliament fiasco on top of that, where they decided to finance more debt. This is a
Yeah,
multivariable thing that
exactly.
you can't compare. Also, so is our time right now. This is a multivariable scenario that is not unlike any other time in history. If you look at the crash of 2008, it wasn't crashing because of inflation. It's a whole different thing. There was inflation, but it wasn't due to all the money we printed. It was due to, fraud. So we're going to look at, well, more than fraud, but, we're going to look at a
Yeah.
quick vid.
Opposed to learning from your
So
mistakes, moving on, and
this is
looking into the future and trying to do
minorly
things
calls out
better.
Burry.
However, this has been one of our big
Calls
focus
himself,
points throughout 2022 is that we
I think.
weren't going to see
What?
a massive rise in the unemployment rate like we did in 2008, that it wasn't the end of the world, that we weren't going to see a contraction in S&P 500 earnings like Michael Burry has been so vocal about, which led to the 2000 and 2008 crashes. We haven't seen any of that. Right now, could it come? Absolutely. At one
this
point, a
is
recession comes. At one point,
where
you're
he's
going
right.
to see unemployment rate rise, especially taking into account the massive monetary shock that we've had throughout 2022. But the fact of the matter is that we're not there yet. We're not seeing a steady rise in unemployment. Now, let me further my point a little bit before you guys harass me in the comments, and let's select some of the key bear market rallies throughout history that could look similar to today.
So that's where it is fair. He does call out, being like, hey, I could be wrong. Let me get my point out. Complete respect. We're all, I don't know for sure. I'm pretty confident. I don't know for sure. I'm on this side with Burry. But it's the same thing that everyone's been arguing about in the media. We had a 2% labor shortage. So you're not going to have the same history of employer status over time for this time. And we lost the amount of people in the workforce.
Yeah.
And that's a huge disagreement.
You're talking about the decrease in labor participation rate.
Yeah.
And how that is not reflected in the unemployment rate that we've seen. There are no doubts that there are fewer people working at this point in time than there were pre-pandemic.
Yes. It's just a fact.
Okay. Yeah.
Right? We're going to look at a couple things here. We showed this in another vid. I mean, this is music to me and Vinny, right?
Yep.
Because it wasn't confirmed. Well, it's still not confirmed.
It's still, yeah, exactly. He's still dancing around it. He loves to be mysterious, but yeah, I think he's certainly kind of letting you know at least a little bit that he's aggressively thinking that direction. Put it that way. We've known for a while. He's talked about it being the greatest bubble of all time by 2 orders of magnitude, which is insane. Like I don't know if anything is approaching that level of frothiness, but yeah.
Amazing. And that earnings thing that he was talking about. Where it's like we haven't seen their earnings decrease in companies. That's kind of true. We are seeing earnings that is not as good for across all companies, but it doesn't just, you don't just go from killing it, trash. There's a little bit of a gap there.
Yeah.
This is the SPY, okay, and I'm gonna do a more interactive chart at the end of this, but this is the short term, okay. What I want to look at is the long term. This is from 2000. Look at just the slope. Ooh, geometry. I finally used it. Look at the slope of the white line here. Let me move my face. What is this, like 2018? Yeah, 2018. Then look at the slope of the green line. That's insanity. You have to have a fairly large correction for that much of a steep incline. Is that not wild?
Yeah, no, I totally agree. I mean, definitely, like it's the part after the pandemic that is much steeper portion of that contribution there in the green line, which makes sense given the absolute ridiculous money printing that went on. A lot of that money ended up in assets like the SPY.
Right. So it's something that we're gonna have to come to terms with.
We're going to show you how we're putting our money where our mouth is. So this is still my stupid little fun money account. This account's been wild the last couple of years, but basically the trade I have right now is aggressive. What I have done here is I have 2 in the money covered call spreads that I've sold. So whereby if the SPY has a dramatic sell off over the next basically 2 weeks or the next 2 months, that I will profit significantly from that. Looking at the upside in this is up to 100% profit basically on my money over the next 2 months. That's aggressive. I know it's still a little stupid aggressive, but we named the channel appropriately. Yeah. Well, we're starting to kind of hit that 200-day moving average. We're getting very close to that. So I think we're ready for another leg down here, and that's what this trade is on. That's why I did the really short one, only 2 weeks, and then I have the little longer one going out 2 months, which is deeper in the money. So I have a 380, 390 call spread here, and I have a 370, 380. This is the one that goes out to January 2023. The 2 week one right here is 380, 390. So I need the SPY to get below basically like 385 by 2 weeks from now.
That one is ballsy as shit, man. That one
is
real ballsy.
It is. I'm not gonna lie. I mean, my maximum loss on this is I think is like $300 basically, or under that. My maximum gain on this is like $750.
Yeah, I mean that's the risk to reward is worth it. Here's mine. So I'm doing a little bit more than Vinny. I'm on like 18K short right now. Yeah, no, it's a lot. Yeah, no, it's a pretty good amount. My logic is, huh?
You have more time to be right though than I gave myself for this one.
So I have 224 SPY puts, one Q. I just bought this Q 2024 SPY put for 265 for $2,500. What did I spend? What is it?
Nice.
Yeah, okay, look, 2,545. So 2,545 bucks. Now, I think I'm in the whole 1,500 total for all of these. It's shitty because when the SPY was at 360, I was up 40%, which was gross. But I want to try to see to hold this. I may cut these 2023 positions if we don't have a decent drop, or if one other thing happens. Let me go to
What's your timeline for when you would have to see that decent drop by?
2 months.
Oh, sometime in the next 2 months. Okay.
Yeah.
So
Or
that aligns.
this. Let me get rid of this. Can you see my? There we go. So
Yep.
this 200-day moving average. This is the important one, right? I've done multiple videos on it. Look at this beautiful. Oh my God, that's arousing. It's so perfect. It touches it to the cent.
To the tip.
To the tip. We looked at multiple crashes and how the 200 moving average acted. If it shoots up above this 200 moving average with very little resistance, I'm going to dip on the 23s. I'll take a $2,000 loss. Is that a lot? Yes, but it was to gain 6. So to me, the risk is worth it, right? That's where we're at. I don't know why Game of Trades is, doing his thing, but give us a like and subscribe.
Yep. Definitely come back and like and subscribe if we're right, which we probably should be in the next couple of months if we're anticipating a bounce off the 200.
Yeah, more importantly, if we're wrong, we'll lose money. So that's the good part. That dude's wrong constantly. No consequences because he has an $80 class. All right, guys.
See you in the next one.
Have a good one.